Look at this table. Which index do you think did the best in 2018? Many would have said small cap or maybe mid cap, but it's the Nifty 100 that topped the board then. Let's go a lot closer to 2024 and tell me which index has done the best so far. Nahi pata na? Well, until now, it's the small cap 250. But if I were to ask you which index is likely to do the best in 2025, then probably I'll get a long silence. My point is, no one can confidently predict the future. And if I were to take this a layer down, imagine having to forecast which sector is likely to do well in the coming year. And that's not where it ends. Even within each sector, there are a number of subsectors. And as the economy continues to grow, as more companies get listed, this task of identifying winners is going to get a lot more difficult. But one category of schemes that makes this task a bit easier for investors, and perhaps my favorite category within mutual funds, are the multi-cap schemes. In this video, we'll go through why I'm a big fan of multicaps, as I also introduce to you all the Groww Multicap Fund that's currently going through an NFO. More about that later, and for now, let's begin. So what is a multi-cap fund? Well, a good way of understanding it is by learning what a flexicap is. You see, the word flexicap represents those schemes wherein the fund manager can allocate any proportion, any percentage of the assets to either of these three buckets. So if the fund manager chooses, he or she can have 80% of the assets to large caps, let's say 20% to mid caps, and nothing to small cap, or any of the hundreds of combinations that are available to them. Of course, there's no real problem with this. After all you're doing is to give the fund manager the flexibility to allocate across market caps and to do with your money what he or she thinks is the best approach here. But what it also meant is that there was not a single mutual fund category an investor could access to build a truly diversified portfolio. Realizing this problem and wanting to have something that is truly a combination of multiple caps, in September of 2020, SEBI, the Securities and Exchange Board of India, mandated the creation of a separate multi-cap funds category wherein every scheme must have at least 25% of its assets invested in all three market cap categories, that is 25% or more in large caps, 25% or more in mid caps, and similarly in small caps. Now, while this might seem a little restrictive to you, but look at it this way. So firstly, the fund manager continues to have the flexibility in deciding the overall allocation, which means they can't do an 80-20-0, but they can surely opt for a 50-25-25 or a 40-30-30 or a 33-33-33 and so on. A second benefit is that the fund manager can pick specific stocks within all three, that is large caps, mid caps, and the small cap bucket, which is great for investors like you and me because thanks to multi-caps, our monies will now get invested in the best, or rather the most ideal companies within each of the three buckets. Personally, I'm a big fan of multi-caps. If not the fund, then definitely the multi-cap construct, as it gives me good control over my allocations. It effectively navigates the dynamic nature of the Indian stock market, and it's done really well for me in terms of performance and volatility. So it's the fulcrum around which my own wealth creation strategy is built. And even if you're new to investing, do have a look at some of the research I've compiled that's coming up in the next section. Now, multicaps are actively managed, at least most of them, which means our examination of it needs to start from its benchmark, which for most multicap schemes, including the Groww Multicap Fund, is either the Nifty 500 Multicap 50-25-25 Index DRI or the Nifty 500 DRI. Now, between these two, Nifty 500 Multicap 50-25-25 Index is the most suitable benchmark as it's a lot closer to how a multicap fund is actually designed, unlike the Nifty 500, which is mostly large cap in nature with very little of it in small caps. In terms of performance, the multicap index has done a lot better than the Nifty 500 and also the Nifty 50 across many years when examined on a trailing basis. And when I computed these numbers on an SIP basis, there's historically been a 1.5 to 2% alpha, which is in line with my own experience of having invested in multicaps for a few years now. I also looked at rolling returns, and across the years, the average and the median rolling returns have always stayed in that 13% sort of range, which is a good 1.5% higher than the Nifty 500 index. When split into performance slabs, while one observes a little scattering in the 3-year and 5-year rolling return data, the 7, 10, 15-year period shows a very strong probability of achieving returns in the 12 to 16% range. So if there are any conservative long-term investors watching this video, then I'm sure this information here will come very handy. In fact, an interesting analysis is, okay, you remember this image I showed you in the beginning of this video? Well, let's insert where the Nifty 500 Multicap 50 25 stands, and one can see a middling second rank, third rank kind of performance, which I think is an excellent way of explaining volatility in the sense that investing through multicaps is a more disciplined way of approaching investing and why I talk so highly of it. Okay, now that the numbers are clear and impressive, let's quickly go through the multi-cap offering that Groww Mutual Fund is coming up with. So much like other schemes in its category, the Groww Multicap Fund will have at least 25% in each of the three market cap bands, and for the remaining 25%, Groww will aim to allocate it dynamically based on market conditions, as it also focuses on growth opportunities irrespective of whether it exists in the large, mid, or small cap arena. In fact, let's spend a little time on what these growth opportunities are, and per my interaction with Grow's fund management team. By the way, this fund is being managed by Anupam Tiwari, and I had the privilege of doing a podcast with him a few months back. So the focus here is on finding growth pockets with a deliberate emphasis on small cap stocks, which have shown a significant improvement in quality over time thanks to better access to talent and capital, making any investments in them increasingly attractive. Other growth opportunities in Grow's radar includes a resurgence in exports aided by government support, China's reducing dominance and reducing cost of capital, the rise of consumption and especially premiumization in real estate, auto and jewelry, the financialization of savings, and we are already seeing massive growth in retail participation, the big infrastructure push such as the National Infrastructure Pipeline, Smart Cities Mission, affordable housing, etc., which opens up a number of opportunities. And of course, there's import substitution, or the Made in India initiative as we commonly call it, that's aimed at boosting domestic production, increasing employment and reducing import dependence. So that's how Grow's Multicap Fund aims to capitalize on India's growth as it positions itself around the sectors and companies that are likely to do well over the near and moderate term. A few more things on Grow's multi-cap offering. The NFO is currently open and it closes on the 10th of December. The minimum investment amount here is just 100 rupees, so it's pretty accessible. There's an exit load of 1% if units are redeemed or switched out within a year of allotment. And now that I've said it, when it comes to multi-cap funds or any equity fund for that matter, I'll genuinely suggest you keep an investment horizon of at least 5 years. And finally, in terms of risk, and because this is pure equity, the scheme is rightly labeled as very high risk in the product riskometer. So I hope I've covered all the bases here. We spoke about what a multi-cap fund is and how is it different from a flexicap. We looked at performance and I anchored it around the Nifty 500 Multicap 50 25 index. And we also examined the upcoming Groww Multicap Fund in terms of its potential construct, its stock selection thought process, and some quick pointers that any potential investor ought to know. Please ensure your investment in this fund or any scheme for that matter, it should fit in well with your overall portfolio construct. And if there is the slightest doubt, and also because this video is for educational purposes and it's not a recommendation, please do explore consulting your financial advisor before investing. Once again, thank you for your time. Remember, the NFO ends on the 10th of December. Do like this video, do subscribe to my weekly newsletter, which has now crossed 44,000 subscribers, and I'll see you very soon. Until then.